This is week 2, problem 2, and it basically asks you to make an income statement, statement of owner's equity, and a balance sheet based off of your ending or balances of the different accounts. And so if we take a look at this, we have each account. We automatically should know where they belong to, but so we actually know cash belongs in assets, account receivables belongs in assets. This belongs in asset, prepaid insurance in assets, delivery equipment, which is also revenue, belongs in owner's equity, accounts payable belongs in liability, capital and owner's equity, owner's equity, and wages expense falls under owner's equity, rent expense falls under owner's equity. And unfortunately, delivery equipment is actually a car. I don't know why I thought it was delivery fees. That would be under assets as well. Okay, we open up the income statement, and basically, the income statement, the very first thing you want to do in the income statement is you want to include the very first line over here has to include the actual company. The second line has to include the name of the statement, and the company name is Luce's Delivery Service. So we're going about Luce's Delivery Service. It is an income statement, and this, the very third line, would be the actual month. So it would be for the month of October, for the month ending in October, for the month ended in October 30th of 2011. 2011. All right, so the next thing is we want to go down here so that way we can enter the transactions in here. So, income statement is basically your revenue minus all of your expenses. So, your revenue minus your expenses. So, as far as revenues, we only have one revenue, and it is delivery equipment. It's not delivery, but delivery fees of $13,000. So, we have delivery fees of 13,000. The next thing is we have expenses, and we have the different kinds of expenses, which we have wages expense and rent expense. Do we have any other expenses? I do not see any other expenses. So wages expense and rent expense. Drawing is actually not an expense. It's for personal use. These would be for actual business use. So wages expense and rent expense. So wages expense and rent expense. And wages expense is 3,000, rent expense is 2,000. So wages expense is 3,000 and rent expense is 2,000. So technically, the total expenses, if we wanted to add the total expenses over here, would be the sum of your rent expense and wages expense, and that's not 20,000, that is 2,000. That makes it 15,000. So your income statement would be equal to your revenue minus your expenses, which gives you a net income of $8,000. If this was a negative sign, meaning that if you would have negative profit, it would be considered net loss. Okay, the second statement would be the statement of owner's equity, and like we said, the very first line would be the actual name of the business, so Lucy's delivery fees, I believe, delivery service. The second line would be the statement of owner's equity, so the actual statement's name, equity. And then it would be for the month ended in October 30th of 2011. So then what we'll do is we will start by the initial capital that we have. The initial capital that we have, and there's different ways you can do this, but I mean, there's no right, as long as you have the right question, there's no right or wrong answer. So the initial capital that it started with is $12,000. So $12,000. Now we look if there was any investment during October, and obviously the only capital that we have is $12,000, which is what we want to go with. So total investment would be $12,000. And then we always include the net income because obviously the net income it gets a part of owner's equity when we start November 1st. It automatically moves to the new capital of November 1st, which includes your net income. So your net income is equal to, you get that from your income statement. It is $8,000. And then because drawings is on personal use, it's not considered as an expense, is minus your drawing. And the drawing, how much did you draw this month, was $5,000. So technically, your increase in capital would be your increasing capital will be equal to the 8,000 of net income that you have made minus the 5,000 you withdrew. So your increasing capital would be $3,000. Therefore, your capital as of October 30th, 2011, meaning that in November 1st, your capital would be this amount would be 12,000 plus the 3,000. So it would be 15,000, and I am actually going to highlight this. So when you go over here in the questions, and this would have said what would be the delivery says November 30th or November 31st, you would automatically see under the capital over here, not the 12,000, you will see 15,000 in November 1st. So that's what it means, the increase in capital over here, and then you add both of them and you would get a new owner's equity. And then you have a balance sheet. And a balance sheet is very similar. Again, we start with the actual name, which is Lucy's Delivery Service. And then the second one would be balance sheet. And the third one is as of October 30th of 2011. Now keep in mind the balance sheet is only in one day, so you can have balance sheets every single day, whereas the income statement and statement of owner's equity is for a month. So let's see under assets. Under assets we have cash, we have account receivables. What else do we have under assets? We have actually all of these. So if I want to just do this, I could copy them and post them under the sheet right here, and then we have all of these, and then we have the balances right beside it. I'm going to copy this again. It saves us plenty of time, and the balances are there, and then I will have the total assets right here, even though I think I probably have them all the way at the end. Yep, I have them all the way at the end, so let's do that. Let's follow the actual outline. So then the total assets would be equals to the sum of all of the assets, which is on this line right here. So my assets would be $20,500. And then we go over to liabilities. We have accounts payable for a liability, and then the amount for accounts payable, we go over here, is $5,500. And then we have total liabilities, which is $5,500. And then we have owner's equity. And owner's equity is just basically what we have on the statement of owner's equity, which is this $15,000 right here. And then once we're done with that, what is the total owner's equity is still $15,000. Now I add my owner's equity plus my liabilities, and I should be getting the same thing as my assets. And there we go. Now I have total assets right here, which are 20,500, and then I have total liabilities and owner's equity, which is 20,500. If you have any other questions, please do not hesitate to email me.